Most people will not make money in real estate because they believe the wrong things. And honestly, those myths keep people broke. In this video, you're gonna learn the 5 biggest real estate myths that are costing you money. If you think you need 20% down to buy your first rental, or that landlords are stuck fixing toilets at 2 a.m. all the time, you've been lied to. I'm gonna debunk these myths and show you what's actually true so you can start making money on your real estate investments. Oh, and by the way, if I haven't introduced myself, my name is Anita. I own over $1 million in real estate assets in my 20s, and I started out all with just a normal 9-to-5 job. I did this all under a year, and I'm also a licensed Florida real estate agent, and I have my own investment properties. So these 5 myths I'm about to show you, I will definitely say will cost you so much money if you believe them. So let's get right into it. Number 1 is that you need 20% down to purchase a rental property. There are so many different ways that you can buy a property. You can use an FHA loan and only have to put down 3.5% of the property's value to get the house. Or you can still use a conventional loan and only pay 5% down. A lot of people just don't know you can do that, so they don't ask their lender. There's also creative financing and partnerships. Like, you don't have to just pay all of the money yourself when you're buying a property. You can get in on it with somebody else. Most of us know somebody who might want to also invest in real estate. The really cool thing about real estate investing is that everyone kind of has a good idea about what it is. It's not something super complex like crypto or Bitcoin that people might be really scared to start investing in because they have no idea what it is. Pretty much everyone, even a kid, probably knows about what real estate is. When people feel more confident about something, they're more likely to put their money down on it. So you can either find a private investor or maybe even a family member who might want to go in on this with you. Number 2, and this one is so funny because as a landlord, I actually had this belief myself before I started doing it, and it's that you're gonna have to be fixing toilets at 2 a.m. Yo, nobody actually calls at 2 a.m. for a toilet. I have never had that happen to me, and if that does happen, like, what is the likelihood of it actually ever happening even again? Like, think about you, right? When is the last time your toilet broke at 2 a.m.? Probably a very long time ago, if ever at all. Most of the time, if the tenant has a problem like this, they're probably just gonna shoot you a text and you'll see it in the morning. It's really not a big deal. Also, on top of that, as a landlord, you can also have a property manager that deals with all of that stuff for you. So as you start investing in more properties, you can literally just have a guy or a gal that takes care of all of those types of calls for you. So even if something is not an emergency, you don't even have to deal with those headaches at all. That person will handle getting a plumber for your tenant and fixing the toilet, and you won't even ever have to think about it. The third myth is that real estate always appreciates. Yeah, no. In some areas, real estate does not appreciate very well. If you buy real estate, for example, in a high crime neighborhood that a lot of people don't want to live in, it's going to go up in value very slowly. It could take years before that thing appreciates, if at all. So real estate doesn't always go up in value. I know a lot of gurus out there are saying, like, you can't go wrong with whatever investment you choose. It's always gonna go up anyways. But the truth is that not everywhere always goes up. There's also something called cycles in the market. So sometimes we're in a buyer's market and sometimes we're in a seller's market. So a seller's market is something that we're actually just coming out of, like around COVID time when home prices were through the roof and were way more expensive than what the house was actually worth. That was a seller's market because there was more people trying to buy a house than sell a house. So houses were selling for more expensive and sellers had more leverage as to who could buy their property and for how much. And now we're actually headed into a buyer's market soon because home prices are going way down, and now there's a lot more people trying to sell their house than buy a house. So buyers right now are going to be having the upper hand. And also, really just to seal the deal here with point number 3 is you might hear some investors saying you want to buy Section 8 housing, and you want to buy houses that are in high crime and not as good areas because you can still make a lot of money. Now, that's true only because they're focusing on something called cash flow. So they're actually just looking at how much money the property makes every month, but they're not looking to see if the property will actually go up in value over time. Those people don't care about that. Those gurus are mostly just focused on how much can I make right now from the property. Most real estate investors, though, they look at the long term. So they don't just look at the cash flow as to how much money they make every month. They also look at appreciation, which is how much the property goes up in value over time. Oh, and by the way, if you're getting any value from this video, make sure to like and subscribe and follow along here, because I'm gonna be showing you how you can skyrocket your real estate investing, and I'm gonna be showing you how I was able to own over $1 million in real estate assets in less than a year, starting out with very, very little money. So this is not something you need a lot of money for. And actually that brings me right over to myth number 4, is that you need a lot of money to start investing. There are so many creative ways now to start investing in real estate today with having little to actually no money at all. My last 6 units I actually purchased with $0 and 0 cents of my own money. I actually leveraged credit cards to build new constructions, so homes completely from scratch, that ended up being worth way more than the price that I built them for. So I built them for around $300,000 and their market value is over $400,000. So literally just by building a house from scratch off of a credit card, I've already made $100,000 of equity on the property, which is awesome. And by the way, if you want to learn how to do that, sign up for our free community down below. I send a lot of free tips and tricks to your email if you want to learn how to start getting involved in new construction investing, which in my opinion is a way easier way to start real estate investing, because you don't have to deal with things like an old roof, an old AC unit, any hidden things about properties that you might be investing in that you don't know, let's say like water damage and all of that. You don't even have to deal with that stuff or inspections, because you're buying a home that is brand new, built from scratch, and buyers love that too because they get right into a property without any problems. And that leads to tip number 5, which is that you can get rich quick flipping houses. Yeah, no. A lot of times house flippers buy houses that they don't think are going to need as many repairs as they do. Because when you're purchasing a house, especially the way that a lot of flippers purchase houses, like they purchase through auctions or short sales where there's not a lot of inspections going on, so they don't really know like everything that's going on with that property, and foreclosures, stuff like that. Then they purchase the property and they think that it's only going to cost like $10,000 to fix it, but it actually costs like $70,000 to fix it. And especially if you're a less experienced investor, that could easily happen. Many times there's a lot more hidden work on the property than you might think. So fix and flipping for fast cash isn't always that safe. And this is why I don't flip houses myself and actually prefer to purchase new constructions, because that way I know that everything is up to code. I don't have to replace an old roof, an old AC unit, there's no like water damage in the property, and all of these hidden little things that one person might not see just by looking at the property. And also, when you purchase a house that's been already built, it's a little bit harder to get it fully on credit. So that breaks down the 5 biggest real estate myths that cost people a lot of money, as this channel shows you all of the tips and tricks as to how you can be a profitable real estate investor. So make sure to click on this video here, and I will see you in the next one.